Two stocks to consider buying now. Number one, First Solar, ticker symbol FSLR. First Solar produces solar panels that are used in large-scale solar farms, and it's the largest manufacturer in the Western Hemisphere. Solar stocks have taken a hit recently as odds of a Donald Trump presidency have increased. Trump says he wants to repeal the Inflation Reduction Act, which provides substantial tax credits for many green energy companies. The impact on First Solar would be huge, since tax credits could top $1 billion this year for the business. However, repealing the Inflation Reduction Act won't be easy and would likely require a red wave election result. That's looking less likely with the expected nomination of Kamala Harris, but it's worth noting that even if Trump gets in, solar may be okay. In Trump's first term, solar capacity in the US actually grew over 50%. Meanwhile, First Solar already has a contracted backlog worth $23 billion, and analysts think the IRA tax credit could drive $13 billion in free cash flow on its own. That's roughly half of the company's current market cap. So, First Solar stock looks like good value from here. Number 2, Tiendas 3B, ticker symbol TBBB. Tiendas 3B is a Mexican grocery chain that came to the market in February of this year, and it's what's known as a hard discounter. Hard discount stores carry a relatively small number of SKUs and private labels, which means they can negotiate lower prices and offer better value to customers. Steady cash flow then allows these companies to quickly expand into new locations. It's a business model that has been proven to work for many well-known chains such as Aldi, Lidl, Dollar General and Turkey's BIM, and it's clearly working for Tiendas too. The company opened 400 stores last year, taking the total well past 2,000. New locations and increasing same-store sales have allowed the company to grow revenues at 33% a year over the past 5 years. Meanwhile, Tiendas seems to be improving with every new store it opens. Of course, there are some risks to consider. Tiendas' earnings could suffer from volatility in the Mexican peso or a slowdown in the Mexican economy, and the company has a strong competitor in Walmart. However, Tiendas thinks it can get to 12,000 stores in Mexico. After that, it could expand elsewhere in South America. In other words, the company has a huge runway for growth. With a market cap of $3 billion, Tiendas will surely be a much bigger business in 10 years' time. So those are two stocks to consider buying in July 2024, but these are my personal opinions, not financial advice, and I do own shares in both of these companies. To see my breakdowns before everyone else, make sure to join my newsletter at 3minutebreakdowns.com. Thank you for watching.